Okay, folks, welcome. My name is Patrick Zielbauer. Thank you for attending the event today. It is Monday, January 8th, 3:30 p.m. Central. I'm going to go ahead and read some risk stuff first. If you have any questions about this, please feel free to ask. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. All right, folks, just be very careful about using things like day trade margin, only fund a futures account with risk capital. If you have any questions about the risk side of our business, please do not be afraid to have a discussion with your representative in our office. We don't sugarcoat risk at Infinity. We will talk objectively about risk. We can help you as best we can, try to figure out if this is something that's appropriate for you. So please don't hesitate to have that discussion with your representative in our office. Okay. My name is Patrick Zielbauer. I appreciate you coming to the webinar today. I'm going to do a quick little intro and then we'll just kind of get right into it. I've been working for Infinity for nearly 14 years now. I'm an AP or associated person of Infinity Futures. And as you may know, if you're already a customer or thinking about getting involved with us, we offer and support a charting program here called Sierra. Sierra is a phenomenal charting package. It's very inexpensive to use, even if you're not actively trading. So as an example, for those of you who are unfamiliar, if you open and fund an account with our firm, with our minimum, which is $3,000, we can activate for you a copy of Sierra. And if you do 10 round turns every 30 days, then the fee that we will otherwise charge, which is $20, is waived. So it's actually $19.95. So if you're doing a little bit of trading, you're not going to pay for the charting program. If you decide to use it and you are not active enough to meet that requirement, then you will see a debit in your account of $19.95, which is still about half the price of what Sierra charges directly. Plus, we do arguably the best support for it. So it's a very, very good add-on for the account here. It's optional. You don't have to use it, but if you're here, you're probably interested in it, of course. We encourage you to ask questions about the charts, and this will be a great starter event for some people. We'll go into some advanced and some fun stuff too. But I really, really recommend that everybody use the program because it's a phenomenal program. I really believe that, and I think it's going to get 10,000 times better this year. I'm really, really excited. All right. Okay, so just kind of like as a running theme for this year. This year, I'm planning to. How many people came to these events when I used to do them? Last year and the year prior. How many people came to a lot of them? There's some names in here that I know came to a bunch. I plan to do these a lot more this year, probably every Monday. I'm going to try to be a little bit more organized this time around. It was kind of off the cuff. It still kind of is sometimes. Sierra changes so frequently. The features adjust so rapidly that sometimes I just decide to do a different topic the next week. That might happen today. I don't have a description written for next Monday's event yet. So bear with me as we try to find our groove again, but I do plan to do these events on a weekly basis. You may have noticed that the go-to webinar link is a recurring event. So you should get a reminder on Monday as long as you don't opt out. Okay. Appreciate that, Jim and Rick. Thank you. Kind words. Indeed, or New Year's resolution, right? Do Sierra webinars on a weekly basis. So this year, more than ever, I really want to stress simplicity. And that is a really cheesy term in the trading business because everybody tries to tell you that this is simple when it's really obviously not simple. Trading is very, very difficult. It's probably one of the most difficult propositions that exist, self-directed futures day trading. It's really, really hard to do. And most people don't make it. That's the reality. But there are also certain habits that I have seen people do develop over the last several years, over a decade, where I believe I have somewhat of an understanding of what ties together my customers who are either successful, even just break-even traders, or people who I really believe will have a chance to turn the corner as long as they don't lose their money first. And one of the things that I think ties those people together is their ability to stave off decision fatigue. Now, whether they are wired that way in advance, or if it's something that they've learned from their education or their other job or whatever, that is really hard for us to pinpoint. There is very little link between the educational services that our customers subscribe to and their level of success. How can that possibly be true? Because everybody is, at the end of the day, is placing the trades on their own accord. And sometimes you're going to take the trade that the guy tells you to take or the gal tells you to take, and sometimes you're not. And sometimes you're going to take twice the position size when you should have taken a quarter of the position size. Every now and then you're going to average into something that you shouldn't have done and you get in trouble. There are behaviors that start to cause deviation in the performance that we see among our customers. So one of the things I'm going to stress every time we do these events this year is trying to keep things simple. And the reason why I believe that is the case, and that what I mean by things simple is I mean keeping the charts clean. And the reason I really believe that is because I believe that trading is one of those things that brings out probably the worst parts of your persona or your personality the fastest. That's why so many people fail so quickly. If you have a penchant towards instant gratification and you've never displayed that behavior in your life, trading will make you do it. If you have the inability to mirror something in a live environment that you could do very well in a simulated environment, trading will bring that to the forefront fastest. So we all have to look at ourselves and acknowledge our weaknesses when it comes to trading. And a lot of my customers have failed to do that. And a lot of the people who fail to do that are people who are trying trading for the first time and are absolutely convinced that the physiological response to risk will not apply to them. That unfortunately is not true, but it's hard for me to tell people that because, I'm just the guy on the phone. So what we're gonna try to do with these events is really try to I'm going to show you some things you can do inside Sierra to try to clean your charts up a little bit. My goal is to get you to the decision point of making a trading decision a little bit quicker than you'd be able to make if you weren't attending my webinars. I'm not going to necessarily teach you a strategy. I have some ideas, and some of my clients have kicked around some really great ideas as well. But it's really important to me that we get some concepts hammered home, and a lot of it has to do with some technical stuff in the charts that once you see how you can do this, it's like, oh, okay, I can apply that to what I'm doing. I ask a lot of questions about, for examples, I ask during the webinars, sometimes I ask people, hey, can someone give me an idea of 2 different studies they like to put together, blah, 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 blah. Please don't be afraid to share that with me, okay, as long as you're okay with it being in the public eye. Not you personally, but what you're talking about. Because I like to do those in real time. Sometimes I stumble over them, and then I got to figure out what I did wrong, and then next Monday I'll fix it. Okay, so these are going to be pretty loose presentations. I'm not selling anything here. I mean, if you're here, you probably are already interested in our program, or you're probably a client already. So let's everybody put our guard down, and let's just figure out if we can make this thing work for you. All right, that's my game plan for the year. So hopefully that aligns with what your needs are. And why you're here. And if you feel it doesn't, I welcome the feedback. All right, just to some of the questions that immediately came through. These are from people who are relatively new to us, so bear with me. Package 5, yes, Larry. So Larry's asking, is it package 3 or package 5 for the chart? Sierra's got some package levels. Package 5 is the highest one. It's the one that contains TPO profile and numbers bars, which are often referred to as market delta or delta bars, bid-ask depth or bid-ask volume delta, that sort of thing. That is the version you get. So you get the higher level, Larry. You get the one that has that stuff built into it. Okay. So $19.95, Ron, per 30 days, if you elect to use the charting and don't do 10-round turns. That's all you're looking at. All right, $19.95 per 30 days. If you do 10-round turns in the same 30 days, then that fee is waived. That's the fee for the charting. So most people are not paying for the charts because 10-round turns in 30 days is not that much, right? All right, great. Well, thank you for the positive feedback so far. And again, if you have other feedback or questions, please feel free to ask. If I don't answer right away, it's probably because I'm trying to wait till it's relevant, or I might get to it at the very end. But let's try and rip through some stuff here. The first thing that I want to just give everybody a quick update on is a study that Sierra has added. I believe it's only in the pre-release, which is 1684. I updated to the pre-release this morning. The way to do that is to go to help and select download pre-release, and then it'll go through a download process and give you Once you install it, it'll give you either 1684 or higher if they've updated it again today. But the add additional symbol study is this study. Looks crazy. Let me explain to you what it does. I'm actually going to build it from scratch for a second. But basically, we have been asking Sierra for a way to import additional symbols into a chart without an overlay process. So as an example, if I go to File, New Chart Book, okay, I'm going to open up through the Find Symbol button up here. I'm going to open up an S&P chart. Okay, there it is. All right, now what I'm going to do is right-click and go to Studies, and just like I were adding a moving average or some other symbol, or excuse me, some other study, you can click on Add Additional Symbol, click the Add button, so that puts it over here under Studies to Graph, and in the Settings section, you can punch in the symbol. So here I'll put NQH8. So what I'm going to basically do is add a NASDAQ chart underneath my S&P chart. Conveniently, there are also price multiplier and volume multiplier options. The price multiplier might come in handy if you want to see like 2 times one market versus 1 times one market, like a spread or something like that. In this case, I'm just going to leave it at 1, push apply, and the chart is going to reload with the NASDAQ at the bottom here, just like it were a volume chart. Okay, so Ron, the monitor that I'm doing this presentation on is really, really big. Okay, so I will go ahead and maximize the chart for now, but if you're zoomed in, you may need to find a happy medium in terms of zooming, okay? Is that too big for people, or can you see it? I keep it usually as a small portion of the screen because it's a really big screen. All right, so you can use the zoom option. Okay, good. Most people are better with this. Good, thanks. All right, so this is the S&P up here, and then you've got the NASDAQ at the bottom. So what you can do with this here is you can continue this process one by one, adding different markets at the bottom. So when I showed you this screen here, let me just tile these vertically here real quick. This is what we were talking about. Is I had the NASDAQ as the main one, and then I had the S&P, Dow, Russell, crude, and gold. So this is not like, you're not going to sit here and make short-term trading decisions based on differences in all 5 of these markets. But I was thinking about some kind of dashboard or some way to make use of this information. There could be a way where this could be a good like summary sort of thing to look at without having to have a ton of charts open in the background, all feeding data into the main chart. You follow? So the add additional symbol it's under development right now. I'm pretty sure it's pretty close to being finished, but it is in 1684. So if you want to update, you're welcome to use it. And I think there'll be some good applications for it as time goes on. It improves, and as we think about ways to make use of it. One thing that I can think of now, I'm not going to really demonstrate it here yet because I haven't quite figured out 100% of it, but there's a study that's called the divergence detector. And the divergence detector automatically measures the direction in an angle format of one of the main price graph versus any subgraph. So the subgraph could be the RSI, it could be the CCI, it could be something else, or in this case, it could be another market. So especially with the NASDAQ, how it's been getting out of whack lately, and the Russell's been doing this a little bit too, ever since some of the tax plan information came out. There might be some applications of using the divergence detector to look for areas where one market is getting severely out of whack. Okay, so I'm not going to tackle that just yet, but if you're interested in exploring this function, it does exist. Okay, the study is called divergence detector, and it's basically got some inputs that allow you to pick what subgraph you're referencing. So in this case, I could pick the NASDAQ, I could pick the last trade and push apply, and it's going to load some arrows here that have to do with, when this market is up and this one's doing nothing, we're seeing some information here, arrows, and it's all very flexible. Okay, so we'll get to that maybe another time, but that's kind of in my head. I was thinking, okay, that might be a decent application for this particular study. All right. Now, one thing I'll mention here while I have your attention is that these chart files that we're going to go through, anybody can have them. So if you like what you see and you're like, oh, okay, I could use that, or I could work backwards off that and do my own thing, just shoot an email to your rep in our office, whether it's me or somebody else, and we'll make sure to get the files over to you. You're welcome to have them. Okay, there's nothing for sale. Another one of the things I really want to focus on in this particular event, given that it's kind of a new development, is I would like to demonstrate to you something that Sierra has launched called the study summary. Has anybody seen this yet? in one of the videos, or has anybody experimented with this particular function, study summary? Okay, so no need to be sorry, Ray. You're brand new, man. No worries. Peter, yeah, good. So the study summary is kind of like a radar screen of indicator values. So most of you are familiar with the quote board. I'm going to bring up another chart book here real quick. I don't actually have a quote board visible, but a quote, actually, let's bring up this one. No, it's just got the study summary also. Okay, sorry. This is a study summary. And the study summary looks like the quote board, except it's got indicator values in it. So when you look at the header over here, this is not a symbol, but rather a chart. So you can choose to have certain information, regular information you would see in a normal quote board, like the last price, the daily change, the percentage, the high and low displayed. But you can also choose to have other bits of information displayed in the quote in this study summary, such as any custom studies you have, like color background alert conditions, or basic things like stochastic values or CCI and so on. So what it is it's a floating window that gives you a summary of the markets you follow, as well as a visual representation of whether or not some custom event that you may have selected or are looking for is occurring. So let's do some examples of how that might work. So firstly, what I did here was, this is a permutation of a chart that was introduced by another customer of mine named Donna, who was looking at stochastics, and I sort of modified things to get more signals. Hers wasn't getting as many signals here in this market. But basically what this is these are two stochastics at the bottom. So there's a stochastic with a 5, 3, and 2 input, and then there's a stochastic with a 14, 3, and 3 input. So if we just go to real basic stuff, you just right click and go to studies. You look for stochastic slow. Okay, stochastic slow. I added it twice. And then for one of them, if you go to settings here, you can pick the inputs and the colors. Okay, I have the percentage D line is hidden. I'm only showing the percentage K line. And I've got my inputs of 5, 3, 2, and then some other stuff. And then for the other one, I've got 14, 3, and 3, and then everything else is the same. So I basically duplicated the original stochastic and then just changed some of the inputs. All right, so we've got those two. So those are the obvious ones. That's the stochastics at the bottom. What the color background studies are doing is they're giving us a notification when a certain condition is occurring. Now, if you look at this example, this red one right here, this is an easy one to see, okay? Why is this background red occurring? It's occurring because the stochastic is breaking down above the upper line on both of these in the same bar. That's what this is doing. All right, conversely, over here, this green one, the stochastic is breaking up through the bottom line on both of these stochastics at the same time. So when you look at this chart, you can look at the stochastics if you want. You can try to eyeball it, with all your other indicators and markets that you've got on, or you can have the chart tell you when the conditions are true. So the tough part about this is coming up with conditions that work. All right, it's not simple. If it were simple, I wouldn't be talking to you about it. These things will work, they'll stop working. You will have to be nimble. There's no one perfect way to do it. But if you believe that you've got something that's worth following, like if you've got a series of 4 or 5 filters that you generally look at, and you could say, all right, when this, and this are true, generally speaking, I might have a trade opportunity coming up. That is the purpose of this type of study. And this particular study is called the Color Background Based on Alert Condition Study. And it involves a little bit of, I'm not going to call it code because I'm not a developer or a programmer by any stretch of the imagination, but it does require the knowledge of a little bit of syntax that Sierra employs for people like me who are not developers but want to do something that you would kind of think you'd have to be a developer to do. There's lots of webinars that we've got prior on YouTube and stuff that go through some of the examples. We'll go through a couple of them here, but the code kind of looks like this. So when you look at this, like if you just turn your head and look at this thing and you're like, oh God, that's terrifying, it looks a lot more complicated than it actually is. Basically, what Sierra does, folks, for those of you who are unfamiliar, is it reduces indicators to ID numbers. So every study has an ID number, and then every piece of the study has a subgraph number, subgraph, SG. So as an example, every study is going to have an ID 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and so on. And then every piece of the study has a subgraph number. Sometimes a indicator like a stochastic may have more than one subgraph. It could be SG1 is the percentage K line, and then SG2 is the percentage D line, which we have hidden right now. And then you've got SG3, which is this upper horizontal line at the 80 value. And then SG4 is the lower line here at the 20 value. So some studies have lots of subgraphs, and other ones have barely any subgraphs or really nothing to edit. For example, let's go just add volume to this chart real quick. So I'm just going to add volume. Scroll down, volume, 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 like this. Click on the add button, push OK. It's actually putting it in region 2. I really want to put this in region 4, which is a little lower. So let's just change that. Okay, so here's volume. So we've now added volume to the chart, right? So if I right click and go to studies, and I click on ID5, volume, right? ID5, everybody follow that. That's the 5th indicator on my screen. And go to settings and subgraphs, we see that the volume level itself is SG1. So if we wanted to refer to the volume in our little code, we'd be using ID5.SG1. So when you start to understand that concept, it's like, okay, all they're really doing is breaking down each aspect of the study and plopping it, into a format that can be easily referred to. Going back to the stochastic that we were just talking about, ID1, SG1, SG2, SG3, SG4. So some studies have lots of subgraphs and some of them don't. So when you're looking at the first condition that we wrote, you can start to see the genesis of the idea. Okay, this first condition is a cross from above condition, which means the line is crossing another line from above. In this case, we've got ID1.SG1, which is the actual stochastic, and then we've got ID1.SG3, which is the upper line. So we want the stochastic to cross the upper line. All right, and then we want the stochastic to cross the upper line on the second instance of the stochastic. So there's an ID1.SG1, notice that, and then ID1.SG3, and then there's ID2.SG1 and ID2.SG3. So the only thing that's changed here is the ID number of the study because we have two different stochastics. All right, now I don't expect anybody to be able to sign out right now and then go write a whole bunch of conditions, but does everybody who's unfamiliar with our program at least sort of get what we're getting at here with these pieces? Okay? If you don't, tell me. Okay, but this is the beginning stages of understanding. Okay, how do I take this and how do I take that and that and that and make it into one giant condition? So it doesn't only have to be two; it can be more and more. It's object oriented, right, Ray? That's good. Thank you, Ray. Ray says it is object oriented. All right, I've never heard that term before, probably exposing my lack of programming knowledge. But if someone like me could figure it out, I think anybody can. So we've got these two conditions. All right, one of them is basically a bearish condition. All right, and then the other one is the opposite. It's a bullish condition. So if we go to the settings for this particular group of studies, notice how it says cross from below instead of cross from above. There are a handful of these operators: cross from above, and, or, greater than, less than, equal to, greater than or equal to, greater than or less than. There's a handful of these that exist. There's not that many. We can post a link to the directory of them on Sierra's website near the tail end of the event. All right, so this one's very similar, except we're crossing from below, and instead of using subgraph 3, which was the upper line, we're using subgraph 4, which is the lower line of the stochastic. So cross from below, the stochastic, and then the lower line, that's like down here, and then the same thing for the second study. Actually, the first study is up here. So this would be like crossing underneath, or crossing above from underneath, and then the same thing happening down here in the same bar. That's what yields the background condition. Okay, now let's remove the volume for a minute, just because I want I just want to demonstrate one thing, which is kind of silly, but the idea here is that these are only two indicators at the bottom. This is not an overwhelmingly cluttered chart, but many of you, I know it, you use lots and lots and lots of studies. And one thing that you could actually do once you start to combine these, you can actually hide the originals. I could actually hide the stochastics. So when I look at my screen, I'm not even seeing the stochastics. Because some people believe that having these things up on the screen here across, 15 markets and 10 different time frames doesn't have an impact on your brain power and your ability to make decisions as the day goes on. I just vehemently disagree. So I believe that cleaning this up as much as possible is useful. That doesn't mean that there aren't certain situations where seeing the slope of the line or the trend of the line or something like that is useful. There are going to be situations where you will want to see it, but I'd be willing to bet there are plenty of situations that could occur where you've got 4 or 5 or 6 filters all connecting at the same moment, and you don't necessarily need to be looking at them all in order to know if that trading opportunity has made itself present. So I urge you to try to trust yourself. Once you start to build a condition that starts to work, trust yourself enough, trust the program that it's giving you the correct signal, and hide any inputs that you don't absolutely need to have visible. Okay? Cool. Let's see. There was a couple of questions that I missed. Al, yeah, we'll get to the toolbar at the top here. I will cover a bit of the toolbar at the top because I did make some changes, and there's some things that you could do that I didn't really have on display before. Jim, yeah, if you just go to sierrachart.com, they have a reference on their website. Jim asked, do you have access to a manual for Sierra? Yeah, if you just go to sierrachart.com, their entire user manual is their website, so you can use it anytime. Okay. Al, yeah, there is a YouTube page, a playlist on YouTube that is geared towards this sort of thing. So there's a playlist up there. I will post it near the end of the event, okay? Okay. So Al, the other Al, yeah, send me a quick email if you can, Al. Just my initials, PZ at Infinity Futures, if you're interested in maybe becoming a coder for something for hire or something. Maybe we could use your service. Sure. Okay, so Ron asked, can you scan all the symbols for these conditions? And the answer, Ron, is that the answer is yes, you can, but you do have to have those charts open, and that's kind of where the study summary comes into play. So that question kind of leads into what I'm about to do next. So let's cover that in a minute. Dean asked, the vertical lines on the graph, at what point do they turn red or green? They turn red or green, Dean, in real time, unless you want the condition to only be evaluated at the close of the bar. So if you go to the alert tab, there's an option here that says evaluate on bar close. If you only want to see the alert once the bar is closed, you can check that box. If you want to see it in real time, then you can leave that box unchecked. It is unchecked by default. All right. So you're going to see the signal happen, as it's happening. That could be good and it could be bad, depending on, the type of trader you are. It could also be flashing on the screen, like the stochastic is going above and below and above and below and above and below, et cetera. So you have to learn to tolerate that. But it is going to happen in real time unless you tell it to only come at the bar close. But to answer your next question, so I'm not going to see. Dean asks, so I'm not going to see the alert 2 bars after it happens. No, if the condition is related to that bar, you will see it as it happens. Or if you only want to see it on bar close, you will see it at the close of the bar. All right. So this is an example here. I mean, this is a 15-minute chart of crude where, I'm kind of lucky here with these particular signals, but these didn't turn out half bad, right? So here's the stochastic breaking lower on both from above, and it's a short signal, and this is a long signal, and another long signal, and another long signal. So, you have to sort of come up with the idea, but once you have the idea, Sierra makes it very easy for you to realize your idea. All right, that's what we're after. Now, going back to Ron's question, what do we do? How do we look at multiple markets, or how do we look at more than one thing at a time? So this is kind of where the study summary comes in. So what you're going to do is go to File and select Open Study Summary Window, and that's going to yield a window that looks like this. All right, now if I expand this out, we're going to see some columns. All right, there's a couple of tricks here to this to make it look the way that you want and have it arranged in a proper format. All right. I would like to explain what I would do, and then you can evaluate what I'm up to. The first thing that you'll notice is that there's only one background color here. Why is there only a pink 0? Meaning the condition is not currently true, otherwise we'd have a line here. So this is currently 0. But where's the green one? Why isn't there a green one up here? The reason there's no green one up here is that if you are going to use two studies of the same name, like the color background based on alert condition study, I have 2 instances of this. You need to put a unique short name for each study. So I'm going to call this first one, which is my cell signal, in the settings and inputs tab under short name, I'm going to put cell and push apply. All right. Immediately, it's going to show my green column because now it's not seeing 2 of the same titles. So what I'm going to do here for the next one, for the color background, the other study, the buy signal, I'm just going to put buy. Like this. Same thing with the stochastic. So if we're going to be using more than one stochastic, we need to name them. We also have the option to show studies that on the study summary that we have hidden on the chart like we have here. If we want to do that, we need to go to settings. Notice there's a settings window in the top left corner of the study summary, and it says include hidden studies. So when I did that, immediately the first stochastic became visible. The second one's not there because we need to change the name. So for the first stochastic, I'm going to put STOCH1, apply it, and then I'll do, for the other one, I'll just call it STOCH2. All right, now what that does is it puts a bunch more info in here. Now, how many people think that seeing the value of the 80 and 20 lines on the stochastic in this format is useful? Let's unhide these for a second. We're talking about this line, this black line, and this black line, and this black line, and this black line. How many people care about that value in this format? The answer is nobody cares. So how do we get this out of here? So when you go into the subgraphs section for each study, there's a place where you can turn off whether or not this is displayed in the study summary. It's right here. It's called include in study summary. I'm unchecking it for these lines here for each one of the stochastics. That's going to reduce the amount of columns that I have on the study summary. Uncheck, uncheck, apply. Now we're starting to pare down a little bit. So now what we're seeing, if we look at the study summary, is we're seeing information about the market itself, which is fine. You can turn that off too if you want, but if you want to leave it there, you can. I'll show you how in a second. Then we're seeing this slow stochastic, the other slow stochastic, and then the 2 background studies. A couple other things you can do from the settings section that are useful. Number 1, display study names. When I do display study names, now we can actually see the names that we had up here, like the buy and the sell, STOCH1 and STOCH2. So I'm going to leave that on in this case. And then display daily quote data fields. This is checked. That is this information, like the net change, the high, the low, and that kind of stuff. If you have that elsewhere and you don't need it here, uncheck it so it goes away. And what you end up with is a very clean little window that shows you the value of the 2 stochastics and whether or not there's a current true condition in either of your color background based on studies. So, and there's some other things you can do in the settings section as well. There's graphic. You can get to the graphic settings, change the colors, change the background color, that sort of thing. But I would like to demonstrate just a couple other things really quickly, and then how we can, how you can make use of this in the real world. So what's going to happen is, and unfortunately it's 4 o'clock, so we're really not going to see anything because everything's closed now. But when this condition would be true, you're going to get a background color filling in this cell the same color as the study itself. And then same thing with the buy side. This would turn green or this would turn red. or like light salmon colored. Okay. Now what we can do is I can reduce down this chart and I can start to duplicate it. Right click, duplicate chart, right click, duplicate chart. Notice there's a new row displaying in each of the study summary fields. Okay, so now we've got 6. Let's go to 8 total. Duplicate, duplicate. Now I'm going to go to the window menu. I like to use tile as grid vertically. It's the one I use the most. We end up with this. Actually, let's do one more so we're even. Duplicate, tile as grid vertically. All right, so now we've got 9 charts up. So you can either right click on the chart and go to chart settings and change the symbol in here, or you can use there's a / command. So if you left click on the chart and type in / ESH8, you can see the text shows up right up there. Push enter. Now it's an ES chart. Now I'll go to the one to the right. / NQH8. Over here, / YMH8. Down here, / RTYH8 for the Russell. Let's leave this one at crude. We'll change this one to gold, GCG8. Let's do bond, ZBH8. The euro, 6EH8. And then this one, let's do ZSH8, which is soybeans. So now we've got, this symbol format here where we can see whenever the condition is true across any of those markets that we were following. Ron, this sort of should answer your question. All right. Now, does this mean that you have to have all these charts open in the chart that you are normally looking at? No. You can actually have this window displayed all the time. So there's a settings option here called Always Visible Across Chart Books. So if I'm looking at this other chart that I like to look at a lot, I can still see my chart book, my study summary here for my stochastic crossover. So the idea is you build a chart where in the background it's running this test all the time. That chart book's got to be open. It doesn't necessarily have to be visible. And what you then get is you get this screen that is showing you a constant evaluation of whether or not those conditions or condition is true. So this is what I mean by starting to simplify things. To some extent, we're complicating things a little bit. We are encouraging people to look at more data, but not necessarily, I don't really see it the same way as looking at a lot more data. You're looking at the same signal across a number of different markets you'd be following anyway in a much, much more concise and easy to follow format. All right, so now, this study summary here, this is from our other chart book. And if I decide that I no longer want to see that all the time, I can uncheck Always Visible Across Chart Books. And if I go back, it'll go away. All right, so that is to me, a very good example of the use of the study summary function that exists within the chart. All right, does anybody have any feedback about this particular feature? Hopefully you can start to see how this could come in handy. If you have any comments or questions, please feel free to chime in. All right, while I wait for that, what I'm going to do is go over here and show you something that I've been showing for a very long time, which is this little strategy that I tend to follow called the Value Area Breach Project, which is basically a setup that I typically look at where I like to see when the market is breaching its value area high or value area low at the same time the CCI is reaching a positive 200 or negative 200 extreme sort of example. So this is a counter trend strategy. It's really, really hard to trade this strategy if you have a discipline problem, because there's going to be times where, like this, where you get into a position if you're following the system and it could get ugly. There's other times where it could look really, really great, like with the Russell here as an example. But this is a counter trend strategy that basically revolves around the idea that as the market breaks out of its value area, if it does so while an oscillator is making an extreme level or an extreme move, that it tends to revert a little bit. There are a lot of situations where this doesn't play out But there's a lot of those things. I'm not going to say they're visible in advance, but there are lots of conditions where a sell signal is obviously not a sell signal. So for example, with the NASDAQ, I very, very rarely go short or would go short the NASDAQ in this marketplace, in this market environment, because of how much of a wacky outlier it is. Another example would be, especially with the market at an these all-time high areas. Another example would be if you get a short signal, meaning the market is breaking through the value area high at the same time across 3 or 4 indexes, that is generally not a market you want to short, especially around an all-time high, in my opinion. All right, so I would be much more apt in this environment until it stops working to take longs. That's just my belief. But just like anything else, it's a very nuanced way and contextual and subjective way of looking at the market. But basically, what happens is if you're looking at like, here's an example of the Russell. As this market breaks down, it breaks through its value area low, like right around here. At the same time, the CCI is spiking down, so the signal occurs, and then I would just bring up the trading dome for the Russell and buy one, unless I had a reason to not buy one. So this was a simulator, so I was looking at this earlier today, and I actually had a short NASDAQ position and a long Russell position, because like it has been, the NASDAQ was rallying as the rest of the market was falling, and it was kind of throwing the system for a loop. But that's part of trading indexes, especially when they get sort of out of whack like this. But this is an example of something that I have developed over time. I don't mind sharing it. It's not rocket science. When the market breaks out of a range that it has been prior established through significant trade volume, when it reaches the upper end of that range or lower end of that range, it tends to attract attention. So that's there's usually a sporadic or an erratic move around that time, and this is a reversion to the mean strategy. So that's good for some people. If you have a discipline problem or you don't like being on the wrong side of a falling knife from time to time, it's not for you. All right. Cool. All right. So going back to the questions, thanks for the feedback so far is very good. So I appreciate everybody making comments. Let's see, Nagendran, I think I answered your question just now inadvertently about how I would place an order in something like this. So I'm looking for the signal, and then when I see the signal, I look at the other markets too to see if they're all firing like in the same direction, and then I would probably stand aside. Right. Okay, so and that was you can see here that this is a very similar setup that we had with the others. So now I'm looking at this thing. So I'm not I don't necessarily, the study summary to me is not quite as relevant here, but I did add sell signal and buy signal columns in here. So if I right click on the chart, go to studies, you can see that I've got S sig and buy sig for my color background studies. So I am employing the idea. In fact, this window replaced the quote board for me in this particular chart book because I don't need this information twice. I just need to know, this basic info about the chart, and then whether or not the sell signal or the buy signal is firing or not firing at all. Okay. Another thing that I wanted to give as an example, and I probably won't go too much longer, beyond this one, just because we got plenty in here, and we'll have enough ammo for the next one as well, is this cloud scanner. So you guys have probably seen this before. I made this little scanner based on the Ichimoku cloud. So if the market is above the cloud, it's blue in the background here. If it's below the cloud, it's red. If it's in the cloud, it's gray. So what I did was I used the existing cloud scanner that you've seen, a million times in the events, and I put those values in here too. So here's a study summary with the markets that we're following, and then we've got an indicator that basically shows if the market is above the cloud, below the cloud, or in the cloud. So why is this kind of useful? This kind of a signal, in my opinion, is really good for someone who has really come to terms with their own strength or weakness. As an example, traders love to be short the market. Why do traders love to be short the market? I think it's because they like to be the smartest guy in the room. Okay? I felt that way from time to time myself. There is a huge short bias among traders. That has gotten people into trouble over the last several years, especially the last year. There's absolutely no doubt about it. and intraday traders just as much as anyone who wants to be, doom and gloom on the stock market. So how would you as a trader defend your account against trade ideas that were coming through that were giving you short signals in a or not necessarily clearly, but arguably rising market or stable market? You would filter out those signals by telling yourself very clearly that I'm looking at a market that is bullish. This scanner up here, this is cool because it goes a little bit beyond what the study summary does, because it actually shows a visual representation along time. These are 60-minute chunks of how long the market has been above this cloud. This means that when you look at this S&P thing up here, this means that the market has been above the cloud since the beginning of the year, which is true, right? Stock market's been up. So if you're a trader who has a short problem and you were trading a strategy like maybe my value area breach strategy, and the market was going up and it was hitting the value area high up here and you were freaking out wanting to go short, couldn't you agree that it might be helpful to say, well, wait a second, my scanner says the cloud is blue, or this is above the cloud? That is a good example of how to take a weakness of yours out of the equation. If you have trouble going short, or if you like to go short the market and you have trouble taking too aggressive counter trend trades, then notify yourself via some mechanism when the market is in a arguably bullish position. If you are a reversion to the mean trader and you like trading choppy markets, then couldn't you argue that the 10-year note would be perfect for you right now? Because it's going in and out of the cloud, in the cloud, out of the cloud. Same thing with gold. Look at gold up here. Above the cloud, in the cloud, below the cloud, above the cloud, in the cloud, above the cloud, in the cloud, above the cloud, in the cloud, above the cloud. There are some trading strategies that work really, really well in a choppy market. So this is a great example of how you can use, general market picture to filter out, potentially a mistake on your part by going into a market in a direction that is clearly against the trend. Right. Everyone loves to short the market because it goes down faster than it goes up, Howard says. That's true too. That's absolutely true. But it's just, I just think there's another part of it. I think it's just the idea that you can make money when everyone else is losing. It's like there's something that that your neighbor or your buddy at work doesn't know. I just believe that exists. I've known a lot of traders. I just do believe that exists. And so I think that really gets people, into trouble. So again, this all requires a lot of introspection. Like you have to be able to sit there and acknowledge weakness. It's really hard for people to do. It's not. I have a very small ego when it comes to this because I've made awful trading decisions over the course of years. I accept it. So I'm looking for ways to correct my mistakes all the time. And looking at things like this where I can see a kind of a big picture view and how that can keep me out of something a little bit more of a short-term problem, I can appreciate that. And I think that most people might be able to appreciate that. Jim says, do you think 60 minutes is best? What about 30 or 15, above or below? I think that any of this stuff really would. 60 minutes is just nice and slow. It means you're not getting too many changes in behavior. Probably not ideal for a very, very short-term day trader because you're in positions for very, very, very small amounts of time. So sure, you could take the time frame down. I don't really see any reason why you couldn't. You're probably going to see more of this, this behavior, like in, out, above, So as long as you're okay with that, then I wouldn't say that that's necessarily a bad thing, right? Yeah, thanks, Anthony. Appreciate that. Mark, I actually can't show how to execute the order right now because the market's closed. But basically, you would just bring up the trading dome, which is going to be blank right now, and you would just hit sell market or buy market. And then you could do a bracket or a trailing stop or whatever you want. So the order placement's the easy part. Our platform is, if you get onto the demo of the program, guys, and if you're not on one already, it's a one-day learning curve in terms of the order execution. That's super, super easy. Okay? Yeah, and if you want to fire up a trial, Mark, just shoot me an email and I'll get you squared away. You can replay the chart, Ray, by scrolling back in time so that I'm not going to do this now because it's going to have me disconnect and reconnect to do it. And I want to do it during the webinar. But if you scroll back in time like this, so that the current bar is on the bar you want to start at is on the far right side of the screen, then you can go to the chart menu and select replay chart. And you'll get this interface that looks like this that allows you to replay the chart, and then you can increase or decrease the speed. So that is possible. One thing I'll make a note about that is that if you do turn on the replay mode, when you're done, go back to the trade menu and uncheck this option called trade simulation mode on. This checks itself automatically if you go into replay mode. And the downside to that is that later on, if you're using the trading dome and the charts will not talk to each other with respect to orders. Like you won't be able to see an order on the chart that you have placed on the dome or vice versa if that is checked. This being checked kind of throws a wall down between the charting and our trading server, even for simulating. So just leave this unchecked all the time. And if you go into replay mode, just come back and uncheck this. The way that it should determine as a live client whether you're trading for real or practice trading is how you log into the software, not something you switch while you're inside the software. Okay. Dre, the cloud is based on the Ichimoku cloud. So I'll make bigger the S&P 500 here for a second. So like this is the cloud. So this is blue background right now because the market is above this cloud. And it's red here because in this example, the market was below the cloud. So the Ichimoku cloud is just kind of like it's an interpretation of trend. It's been around for a long time. There's a few educators who talk about it. It's not unique to any one broker or platform. It's just it's a way of interpreting the market. So it's called the Ichimoku cloud, and there's a couple built-in versions of it under File Open Chart Book. All right. The other thing I wanted to talk about too. Al was asking about this earlier, just a little housekeeping stuff before we finish up. The toolbar is I constantly mess with this thing. The toolbar can be customized if you just go to global settings, customize control bars and select control bar 1, and it'll give you a whole bunch of choices about what's available on the left and what you currently have on the right. So one thing that I did add up here a while ago is I added these little buttons that look like markets. So as an example, if I click index, watch what happens. Okay, I click on index, it opens up a chart book with all the indexes. If I click on energy, it opens up the energies. If I click on metals, it opens up the metals. Okay, this is on a much smaller scale, as you can see, but you could change that. But I added these. What I did was I added buttons up here, and then I set those buttons to represent certain chart books that I have saved. So you actually all have the chart books themselves. All right, we pushed them all to your system. So anyone who's got a demo or a live account, you've actually got a chart book set that's called metals.cht on your hard drive right now. What you might not have is the toolbar up here to add that. So if you want to customize the toolbar here, you go up to global settings, customize control bars, control bar 1, and you'll see there's actually a chart book section. And what I did was I added a whole bunch of these. I added 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 or so. And like as an example for metals, which you saw earlier, if I go to properties, here's the caption. So that's what's actually on the button. Here's the description. So if I hold my mouse over the button, this is what it shows. And then for customize, it says, okay, what chart book am I opening? And I told it to open metals.cht. So you can add stuff over from the control bar menu, available control bar commands, put it over on the right side, move it up or down so it's in the correct order. And then a lot of these buttons have properties or things you can customize. So in the case of chart books, you can customize what chart book it is opening. You can also customize what color it is or what the caption says. So it's a really neat, it's not that hard. It's one of the same things you see in Sierra frequently where you see, what's available on the left side and what you're currently being used or using on the right side. You see the same thing with studies. Okay, if you right click on the study and go to studies, right click studies, what's available on the left side, what you're currently graphing on the right side. So it's just a general concept. I was just trying to make it a little easier for some people who've never had an account with us or never even used our program to access some of these other markets relatively simply. Scott, you can run live and simulated live at the same time. You can do that. You wouldn't be able to run them on the same computer. You could be logged into your live account and your demo account on the same computer, but the charts will only launch once, and the charts will launch the first time. So if you connect, to your live account and the charts come up, your charts are connected to your live account. Then you could log into the platform again and go into simulated live mode. Like if you had a live account here, you go to simulated live if you want to practice, and it will launch a simulated live version of the demo, but the charts will not launch a second time. So the charts will only launch one time, and they will be connected upon how you log in first. Okay, if you want to go on another computer, you could go to live mode on one and simulated live on the other. That in itself is not a problem. All right. Yeah, Mark, like the letters and all this stuff is customizable in terms of fonts. If you go to global settings, graphic settings, there's a font section up here. You can change, control bar text. You can change all the font sizes and stuff. Yeah. So if you're talking about the control bar itself, you go to global settings, graphic settings, and then click on the fonts tab, and there's a section here called control bar text. Okay. Sounds like you might already have a demo of this, Mark, possibly, right? Okay. Wonderful. Well, I think that's probably a good place to leave it for now. So, does anybody have any final questions before we wrap up? I know it's a lot of information in a short period of time, but really what we're going to try to focus on this year is condensing information, getting rid of unnecessary information, and trying to help each other make this work. All right. I appreciate everybody coming to the event. Thank you for doing that. Yeah, Mark, if you'd like to try a demo version of it that's offered by Infinity, certainly would love to help you. Okay. Yeah, everything's recorded and it'll be posted up on YouTube within the next day or so. All right. And then if anybody wants access to the files that we worked on, just email your representative in our office and we'll get them up there for you. All right. Edie, the compact tool values window, you just you have to have the crosshair on for this to work. Okay, so you have to have your crosshair on, and you go up to window and select show compact tool values window. And then you just click somewhere on the chart, it'll show up. It looks like this here. So window, show compact tool values window, and then left click somewhere on one of your charts and it'll come up. It'll come up like somewhere, somewhere. And they can be dragged around like this, and each chart's got its own, like that. See how it kind of gives the appearance of it moving around. It's really just coming to the forefront. All right. Yeah, William, SierraChart.com has a very good, their documentation is extensive. Okay, it's not earth-shattering and thrilling. Okay, but it's very, very well documented. So if you want to check out some stuff there, you're welcome to. And it's not behind a login or anything. You can just go right to the site. All right. So everybody, thank you again for taking the time. Thanks for the attention. Very good questions, and it's a good group. I really appreciate everybody coming to the first event of the year. One thing that would be very, very helpful, everybody, so we can continue to do these, is bring your trader friends to us. People in your small groups, encourage them to come to the events. Have them talk to the same person in our office that you talk to. Part of the thing that really matters to someone like myself in being in this line of work is if I have people who are referring their trading friends and their buddies over to us, then I can spend more time doing this kind of stuff and less time prospecting on an individual basis. I'm not asking to go out and do my job for me, but I can assure you that I will spend more and more time on this sort of educational material if you are bringing your friends and trading buddies over to me. So that really goes a long way, and we really, really appreciate the referrals. We only do futures. That's correct, Ron. Yep. All right, wonderful. Well, thank you again. I'm going to go ahead and read some risk stuff here one more time, and then we'll wrap it up for the evening. I really appreciate it. We'll see you next Monday. Again, tell your buddies, trading friends, and we'll tackle it again on Monday. Thank you very, very much. Everybody have a great night. All right, folks, trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you. In light of your circumstances, knowledge, and financial resources, you may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Thank you again. Ron, it's a $3,000 minimum to open the account, and we have a very flexible day margin policy. Just send an email when you have a minute to pz@infinityfutures.com. Okay, pz@infinityfutures.com, and we'll get you the detail you need. There you go. All right, thank you, everybody. Have a great night. Cheers.